Welcome to the latest Motley Fool scoreboard. I'm on in Chocolate. We've got longtime fools Jason Hall and Rick Menares giving a 1 to 10 rating to one of the two companies that can claim to be the largest home builder in the U.S., along with Lennar. It's Moneyball Rec D.R. Horton, ticker symbol DHI. We'll rate the strength of D.R. Horton's business, including factors like industry and competition. A 10 is invincible. A 1 is hopeless. Both of you have 7s, Rick.
D.R. Horton is the country's largest home builder by volume, closing on nearly 85,000 new homes over the past year. It has a presence in 37 different states. Most of its revenue comes from selling real estate, homes, of course, but it also provides financing, dabbles in rentals, and residential lot development.
Yeah, I went with a 7 as well. The caveat is that 7 is grading on a curve. This is a really tough industry, very cyclical. Takes a lot of capital, and you're sitting on land inventory that might take years before you need to develop it. And if the cycles turn ugly, you sit on an asset that you don't need. It's tough. So a 7 is actually a really high score in this area. This is not just one of the biggest; it's one of the best. I think if you look at the very largest group of builders, with the exception of NVR, which is the gold standard, and their business model is a little differentiated, I think this is one of the 5 largest home builders. I think this is one of the very, very best.
For management, a 10 is Warren Buffett, a 1 is Homer Simpson. Jason's at an 8. Rick, you're at a 7.
Yeah, so like its homes, Horton has a strong foundation when it comes to executive leadership. I get that. I don't think you become the largest residential real estate developer by volume for more than 40 years without knowing what you're doing. However, a year ago, the company was expecting to move 90,000 to 92,000 homes in fiscal 2025, and it failed to top 85,000. There were obviously macro issues beyond management's control, but for that, Horton hears a boo.
Yeah, you were really bringing the puns, Rick, today, as you always do. I agree with you, but with a little bit of a grain of salt here. I think the macro issues are beyond management's control, but also it's a product of part of the feature of the company's business. You said they do business in 37 states. Sadly, that means that they also do business in a lot of markets that are really struggling the most right now. And I'm going to give David Auld some credit. David Auld is the executive chairman. He was Don Horton. If that name sounds familiar, Don Horton was the founder of the business who died in May of 2024. That's when he replaced Horton as chairman. He's been his right-hand man for literally decades. He joined the company in the late 80s. Paul Romanowski, who's the CEO now, has been at the company since the late 90s. They've been through real estate cycles before. They've been through interest rate cycles. And I think they were really at the core of building what the company is now. Since the late 90s, when those two gentlemen were both at the company, it's a 38 bagger, just the stock price. You throw in dividends, it's a 53 bagger. And that's not just it did really well for 20 years and now it hasn't done so well. It's continued to smoke the market in recent years too. And the management team deserves a lot of credit for that.
For financials, a 10 is a fortress, a 1 is yikes. Jason's at a 7. Rick, you're at a 6.
Yeah, I know the Hortons. They make great donuts, but I'm going with a 6 here because Jason is right about the stock chart. It's a very nice-looking stock chart, but this is a cyclical industry, and Horton knows how to roll when the going is good, and it's been able to protect the shareholders when the going is not so good. My concern for Horton, as well as for all of the home developers, is how it's been riding high in a time when the sale of secondhand homes have stalled. Folks aren't selling their existing homes in a climate where mortgage rates are much higher than what they used to be, signing first-time home buyers and board renters to home builders. That should change in the next few years when the resale market comes back to life. You're already starting to see signs of that. I would be a 7 or 8 for Horton's past, but I'm closer to a 4 or 5 for the next few years. I split the difference with a 6.
Yeah, no, I get Rick's score, and my 7 is actually probably directionally the same as his 6 because I am giving them a little bit of a curve here based on the industry that they're in. And if you look at it compared to its peers, there are a few operators that do better, that have better results in terms of the operating margins and cash flows, but it's at the very higher end of its peer group. Debt has increased, but then you look at things that offset the debt on its balance sheet. And I think it's really strong, and that's a must-have in this industry because of exactly those cyclical pressures and things that Rick talked about.
Jason, let's talk valuation. How well will D.R. Horton stock do over the next 5 years, and how safe is it? 10's a sure thing, 1's a lottery ticket.
Yeah, I think it's relatively safe, especially for the kind of business that it is. My safety score is a 7. I think it's going to generate the lower end of 10 to 15% annualized returns over the next 5 years. You look at the valuation, it's about 12.5 times trailing earnings and forward expected earnings. So the analysts don't think it's going to grow its earnings this year. I think that's probably right. That multiple is the lower end of its 10-year multiple. It's not as cheap as it sounds because this is such a cyclical industry. There's a really wide range of outcomes. And the state of the housing cycle and investor sentiment 5 years from now is really going to affect very, very much what the returns look like. But I like the business, and I think the larger tailwinds, there's pressures right now, but I think we are still generally undersupplied with single-family homes in the markets where there are growing populations and the economic opportunities are strongest. So what we're going to have to see for the company to deliver on the high end of the return expectations there is execute well in the markets where there's opportunity and start to minimize its exposure in all of the markets that it does business in that there may not be as much opportunity.
Yeah, I'm a little more conservative. I went 0% to 5%, 5-year returns, safety score of 6. Most real estate developers are trading for PE ratios in the pre-teens and low teens, just like Horton. It could be a value trap. Analysts already see, as you mentioned, flat revenue growth, but they also see declining profitability in Horton's new fiscal year that started in October. They see business starting to pick up a year from now, but they're not skating to where the puck is going. We've already seen the rental market start to peak in key markets, and a rebound in the resale market will create an even larger glut for homes. Horton will be a survivor for the next homebuilder shakeout, but a bigger slice of a shrinking pie will still leave you hungry for something else. Home is where the heart is.
Thank you to both Rick and to Jason. They've given D.R. Horton an all right overall score of 6.6 out of 10. For top hits, Rick prefers Zillow, and Jason prefers Meritage Homes. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is Cadence Design Systems. Till then, Fool on.